Okay, as you may or may not know, we have started a one-day seminar every Wednesday about position size, safe trading, that sort of thing. For people that are kind of self-professed gamblers in the market or just can't quite get the idea behind how many shares to take on a given trade. This chart here kind of touches on it a little bit, and I'm going to slide the daily over. It's NQ, for NQ Mobile is the name of the company. This is what the daily chart looked like when we had it on watch. And the bigger chart in the background is a 1-minute intraday chart. But, very strong breakout on volume, and then it came back down and touched the 8-day. So it landed on our watch list that day for a potential bounce play. Okay, now using 1-minute candles is really hard to kind of see, but you can see it opened up and then had this pretty good sell-off and then whipped right back. Okay, so to me this says this was the rest of the sellers after earnings, and now it's probably up from here. Okay, so it hit 1770 on this bounce back, then 1760 as a lower high, and then a cup and handle. Great setup here, including the daily chart and the intraday. I mean, I really like this a lot. So this is a great example of what we talk about when we say size matters. Okay, everyone in the chat room knew I liked this over 760. I'm sorry, 1760, because then there's a good chance we're going to take out that bounce spike high of 1770 and probably get to or through the high of the day, and could be a multi-day trade from there because of this kind of capitulation after earnings. Okay, so let's use this example. 1760 over 1760 makes sense for an entry. Now, talking about position size, let's just pretend you're one of these people that just says, hey, Mike's a genius, he runs a chat room, so if this gets to 1761, I'm going in big, right? I'm going to get rich. I'm going to go 4,000 shares. Let me bump over one more minute. And you can see, so there are triggers for anyone looking to go long 1760. Let's just say someone, threw a bunch of margin. They have a $25,000 account and they went, 2 or 3 times margin and on margin and bought 4,000 shares on this spike. Okay, keep in mind, this is a 1-minute candle. So if they saw it hit break 1760, they might have just said, okay, 4,000 shares at the market. They're probably the one that got filled at 1768, the top of this spike. So pretend you're that person. You're gambling because you think, hey, I'm just going to go in big and get the big one. Now, these numbers are going to be different for everybody, but I'm choosing somebody with basically around a $25,000 account. So say you have 4,000 shares and you're filled even at 1766, not quite the high of that spike. Look what happens 1 minute later, you're at 1754. Okay, so what are you going to do? You're probably, if you're like most people, you're going to say, oh man, failed breakout, and you're going to start selling here. So in the interest of my example, my hypothetical situation, 1766 fill, 1754, you say, oh man, they faked me out again. Mike's not so smart after all, he's an idiot, and you sell it all. Okay, so now you've got, let's just say 12 cents loss on 4,000 shares. So what is that? $240, almost $500, right? And I think most of you who have traded for any length of time could actually imagine that's a possible scenario, right? If you went in big there, you're probably going to kill it here. So you're looking at a quick $500 loss, probably in about 1 minute. Let's continue. Actually, another couple minutes. It goes by and you say, oh man, I made the right decision, right? I'm out. And it's just chopping around. Oh, wait a minute. Maybe I screwed up. No, I was right. Oh, wait a minute. Now it's above now it's back to where you bought it. And you probably can't pull the trigger anymore. You say, well, I'm not going to get fooled twice. And it runs for the rest of the day. And you can see it continues into the next day. Okay, so this could have been a quick $500 loss. Let's go back and pretend we never talked about it. And pretend instead of 4,000 shares, you took 400 shares. Okay? Mike's a pretty smart guy. He's probably right. But just in case, because any trade can fail, I'm going to go 400 shares. You filled at 1766. You're going to give a 20 cents stop, right? So your stop's going to be at 1746. And that's an arbitrary number, I know, 20 or 30 cents, whatever. But on 400 shares, if you get stopped out for 20 cents, you're not even talking $100 with commissions, okay, as far as a loss, instead of 500 by going big. So now you're comfortable, okay? You've got your stop down here at 46. and then you say, okay, that was a little failed breakout, but now Mike's right. Hey, he is pretty smart. Which, remember, I'm just making jokes when I say that, because I've been trading a long time, but it doesn't matter how much I like or dislike something, I could always be wrong. Okay, it has nothing to do with how smart I am. Trade's either going to work or it isn't. But you can see here in this same example, okay, and this ends up closing up around 18. I think this was near the close of the day. So if you're like me and you don't want to hold overnight, 400 shares, 1766. So you're up about 32 cents on 400 shares. What is that, about $128, and you're right at the close, and you're at a whole number. So there, in that example, trading with proper position size, okay, you end up on that one trade in the course of about an hour, maybe not even an hour, you end up about $130. And in the scenario where you went in big, you were down 500. And these are just rough numbers. So that's a $630 turnaround by trading intelligent instead of gambling. And this is just one example. At the end of every session, I could probably show you 50. And like I said, and the next day it gapped up. I actually took a swing in this, which I rarely hold overnight, not as the day trade that I'm talking about here, but I took it right at, I can't remember, 1750 something here, and I sold the next day, I believe, at around 1850. So I made $1 on an overnight, but that's not generally what I do. I just like the chart enough. But you can see again how important position size is just from this one example. Again, at the end of a week, I'll have hundreds on any given week.